Let us talk overseas a little bit here. Japan led global equities higher in May as U.S. lawmakers battled over the debt ceiling. We were seeing some reforms happening in corporate Japan. Let's take a look at the bigger picture and what we can expect for the rest of the summer with Max Kettner, HSBC Chief Multi-Asset Strategist. Max, I wrote earlier in the week about the strength we've been seeing in Japan and this sort of debate now over, in the past we've seen foreign investors come into Japan and then they sort of leave again. And we talked to a couple of folks this week who said, well, maybe this time is different. They're making some fundamental reforms in improving return on equity over there. What's your view on Japan?
Yeah, look, Japan on the equity side, we're just neutral, really, because the problem is, I guess, I don't think, this time is different. I think always the sort of famous last words. So I'm always cautious on using them. But really, the point is about Japanese equities. Why have they rallied so much since the start of the year? Well, quite simply because people were really much more afraid of the Bank of Japan changing course much more dramatically, much earlier. And that is what's not happening at the moment. So as a result, right, we've seen obviously this dollar weakness since the start of the year, or since Q4 2022. But at the same time, we've seen dollar strength against the Japanese yen, right? So the Japanese yen, when we look at that, has been depreciating really quite dramatically over the last couple of months, as really there isn't really any dramatic change in the Bank of Japan policy in sight anytime soon. And that, of course, supports some of that earnings picture in Japan, as Japan still has a huge share of foreign revenue exposure. So it's really much more, I think, a Bank of Japan and FX story that temporarily now really supports the Japanese equity market. I would be, however, ever careful because after this strong rally now and after this easing of domestic, not only global, but also domestic financial conditions, it only needs a handful of, maybe one or two above consensus inflation prints in Japan. And this whole story, this whole, concern around will the Bank of Japan widen or maybe even abandon its yield curve control, and all that could lead to a stronger yen ultimately. And that would then weigh again on Japanese earnings.
And so with that in mind, I mean, much of the focus now, even as we discuss Japan and even as we discuss kind of the Asia-Pacific equation right now, what does that mean for some of the emerging markets that some investors would have looked at in the past?
Yeah, I think, Japan has obviously been one of those, one of those countries that's been benefiting perhaps from some of the money going out of China and out of the Chinese equity markets, as those indices simply weren't really the right ones to capture this kind of domestic and consumption-driven recovery that we're seeing in China right now. So that also has perhaps a bit of an expiry date. But I would say, other equity markets in Asia, if we look, for example, about ASEAN and the reopening, think about, tourist arrivals really sky high in large parts of ASEAN. Other markets as well, like Korea, that are very well balanced between their value and growth components. That is quite a positive for some markets like that as well. And India as well, right? India's got this sort of longer term thematic story, that longer term convergence story still. Of course, it's expensive, but let's remember India's always been on the expensive side of things in the last, really in the better part of the last 10 years. But the convergence story still is very much alive there. So there are really pockets outside of China and outside of Japan that are really still working. ASEAN, Korea, India, all of those are still quite attractive.
All right. Max Kettner, HSBC Chief Multi-Asset Strategist. Max, thanks so much for taking the time here with us today. Appreciate it.